Hey guys, my name is Faizi and this channel is about finance and investing, and today we're going to be looking at EML Payments, ASX EML. This company is all about providing payment solutions to businesses so their end customer can have the best digital experience, and a big focus of this company is on technology, which is why it's a fintech company. Now in this video we're going to discuss what the company does, its short overview, financials, and my opinion. Now before we begin, this video is not financial advice. I'm not a financial advisor. We are speaking in a very general sense only, so please do your own research. I just have a passion for finance and investing, same as you, so let's get into it. Now having a quick look at the stock price, if we look at the 1 year return, it's going to be about 285%. Now once again, this return is a bit skewed because 1 year ago was when we had that March sell-off. Now looking at the 5 year return, we can see that it's about 280%, which is quite good. And we can see that in the period between February and March last year, there was a massive sell-off at about 70%. But in their half-yearly announcement in February, the return is now about 22%, which is a nice increase. And if we look at the share price graph, it seems to be on an uptrend, on track to beat its previous highs of about $5.50. So what does this company do exactly? Let's look into it. Now the mission of EML Payments is to create an instant and secure payment solution to connect customers and their customers anytime, anywhere, wherever money is in motion. Their vision is to offer customers a feature-rich, fully embedded payment solution via a simple single touch point, and their purpose is to inspire transformative digital change for customers and communities. Now that's all well and good, but what does this company do exactly? Now at the moment, EML Payments has three main divisions. You've got general purpose reloadable, gifts and incentives, and virtual account numbers. So let's talk about the first one, which is GPR. So essentially what EML does is that it offers reloadable cards to companies who then will give these cards to their customers, and then the end customer will be able to use these cards with the company. Now the reason why these cards are good, because the company can fully customize and brand these however they like and give it right to their customers. And as you guys can see, this has worked really well with companies like Sportsbet, Bet365, Ladbrokes, and so on. Now why this is beneficial for betting and gaming companies like this is because through EML's technological efficiency, the end customer can immediately transfer and withdraw funds, which ultimately means that the customer will end up spending more, because through traditional methods like banks, it just takes way too long. Similarly, it's been used quite well with salary packaging offers, and it's also ATO approved, and brands can use these GPR cards to drive brand loyalty, incentives, and rewards for their customers. So that's Division 1. Division 2 is GNI, which is gifts and incentives. This is fairly simple. EML lets businesses design their own gift cards so they can be sold to customers. And once again, this drives brand loyalty, rewards, and so on. Now, EML implements these solutions with companies by providing dedicated training and support to ensure that they can maximize the use of this technology. And also, EML is actually the largest provider of shopping mall gift cards, which makes partnering up with them very valuable. And Division 3 is VAN, which is virtual account numbers. This is to make businesses and their suppliers' job a lot easier by having secure and fast payment solutions, no matter how big or small the supplier is. And it will also cut down on costs and time for EML's customers. Now looking at general purpose reloadable, we can see that the revenue was 54.4 million, and this sector was the main driver of revenue. And there was a massive increase in transactions in this half year compared to the previous half year, and the increase is about nearly 3 times. Looking at GNI, it's had a bit of a bad year, mostly due to COVID-19, as malls were closed and people were staying indoors, so they could not use their gift cards. So we can attribute this to that, and Van seems to be slowly growing as well. Now, if we look at the 5-year track record for this company, we can see that EBITDA is growing by a KGR of 56%, which is just insane. And we can see that the GDV, or the gross debit value, slowly increased for GPR and Vans, but there was a massive increase in December for GNI, which is gifts and incentives. And we can see that this increase was particularly in the month of December, and this is due to mostly Christmas shopping and Christmas gifts, because lots of gift cards were given out. Now if we look at the global breakdown of GDV, we can see that it was mostly down because of mall closures around the world in Canada and the UK, because Canada had level 4 restrictions from mid-December, and the UK had its third national lockdown, which is expected to continue until end of March 2021. However, incentives grew about 11%, offsetting the loss in the malls division. Alright, now let's look at the financials of this company, and looking at the gross debit volume, this is an indicator of the volume of payments processed by the company, which increased by a massive 54% in this corresponding period, which is super positive. But when we break this figure down, it's even more interesting. Now, we can see that GPI had a massive growth at 233%, and these are some huge figures coming out because they have more than tripled, driven by mostly salary packaging and gaming, which also had lots of organic growth. But the GNI figures are down about 11% due to challenging conditions, mostly due to COVID, more closures, restrictions, and so on, and Vans increased by about 6% as well, which brings us to the revenue growth of 61% and EBITDA growth of 42%, which is quite nice to see. Now, looking at this visualization, we can see some pretty interesting things coming out of this, and we can see that GNI, although accounted for a very low percentage of gross debit volume, it nearly drove 1/3 of the overall revenue for the company, as shown by the red portion of the graph. Now, as we see vaccines roll out and restrictions end globally, and we start to return to a new normal, we should start to see an uplift in this sector as well, and GNI should start to take a bigger piece of the pie. And VANs took up quite a major portion of gross debit volume, but they only contributed a very small portion to the overall revenue. Now, looking at the balance sheet for this company, we can see that the cash balance has grown by 15%, which is quite a good sign. It's gone up roughly about, say, 18 million, and overall current assets have grown by 31%, which is quite nice, and the overall asset increase is about 16%, but current liabilities have also increased by 25%, but by a less proportion than current assets. And if we calculate the current ratio of this company, it's actually less than 1. It's 0.82. Now, this may look quite alarming, and it would be good if the ratio was at least over 1, but EML right now has proven to be a very strong and resilient company, especially coming out of COVID, with strong growth prospects, and since it's operating globally, it has a strong track record as well, and if they need some extra liquidity, they should be able to raise cash quite easily. Now, looking at the cash flow statement, there's some really nice numbers coming out of cash flow from operations, and the receipts from customers has increased by 62%, and the overall net cash generated by operating activities has increased by over 300%, which led to the overall cash balance increasing by another 17 million. And we can see that all of this massive increase came from the operations itself, not from financing or investing, which shows the company's strength that they're able to deliver results. Now, my thoughts on the company are that personally, I like it when Australian businesses like to expand out overseas to really magnify their global footprint, because there's only so much growth you can get here in Australia, and expanding onto a global footprint really shows everyone the power of Australian fintech. In the case of EML, I think the GNI division, which is a gifts and incentives division, it's been hit pretty hard by COVID given the shutdowns, restrictions, more closures, and so on. So once we see these places open up more, and we're probably talking about a year from now when most of the population is vaccinated in those areas, and we hopefully return to a COVID normal like post-COVID, GNI should start to recover, and we should see some improved revenue numbers. At least that's my prediction anyways. I think EML is innovative and has lots of room to grow still, but I haven't bought into them just yet. I'm just waiting for a good entry point, and I'll keep you guys updated. So for now, EML Payments is going to remain on my watch list, just like I have Dough and IOU Pay on my watch list right now. These two are also high growth fintech companies. Thanks for watching, guys. Please like and subscribe, and I'll see you in the next one. Bye now. So for now, EML